Very good evening, ladies and gentlemen. At the outset, I'm thankful to the team Taxo and the Ramanujan College, the Teacher Learning Center for organizing this wonderful fundamental course on GST and for the doubt clearing class. Invite me to clear all your doubts as far as the course is concerned or the various aspect of the GST is there. Friends, in the last doubt clearing class, we discussed some of the aspects related to the GST, and I will just go through them maybe for 2 or 3 minutes. That what is this GST all about? I shared with you a helicopter view. That first of all, whenever we are looking for a understanding that uh, if you want to learn the GST as a in a holistic way, first aspect we should learn that what will be the incidence of tax, meaning thereby which activity will attract the GST and which activity will not. And once we are through with the principle that the activity will attract the GST or not, we have to go with a classification, meaning thereby we should be aware about the rate of tax which are applicable. And then we have the various provisions, say for example, valuation rules, place of supply, that I have to charge the IGST or CGST. Valuation means which value, on which value I have to charge the GST. Then the time of supply, meaning thereby when to pay the tax, and then the input tax credit and the other compliances. Then, my dear friends, I shared with you that earlier the indirect tax structure was different. There were many taxes and there were the many impact of those taxes as well. That there were the cascading effect of many types. And then it comes to the GST, wherein the activity can be classified as a intrastate, interstate, and the export and import, and accordingly the tax will be applicable. So if it is an intrastate, CGST plus SGST will be applicable. In case of an interstate, it will be the IGST. And in case of an import, custom duty plus IGST will be there. I discussed with you the benefit of the GST after the introduction, that the removal of the cascading effect, meaning thereby the tax on tax will not be there. Then we discussed about the double taxation. The same activity attracts the VAT and service tax in the earlier regime, but now it is only the GST applicable. And then the cross-sectoral credit, that the chartered accountant getting the credit of the purchase of the bottles, as compared to earlier it was not there and it was a cost to the chartered accountant. Then the ease of interstate movement, making our products globally competitive, and the reducing the compliance cost because there is only one law. There are many benefits like saving the cost and time because there is no checkpoints as such now. Interpretational issues got minimized, meaning thereby more employment opportunity and the more the GDP is there. As the widening of the tax base, you can see the collection by the government is crossing 1,50,000 crore of rupees on a month-to-month basis. Then, my dear friends, I discussed with you that when to take the registration. That in case your turnover is more than 20 lakhs, if you are dealing purely in supply of service, but in case you are dealing in a goods and service both, then the threshold is also 20 lakhs. But in case you are dealing only in the goods, the threshold to take the registration is 40 lakhs. But how to calculate this 20 lakhs? I shared with you that not only the taxable supply, but also the exempt supply, export of services. At the national level, you have to calculate, and then you have to see whether your turnover is, meaning thereby not only the taxable but also the exempt supply has to be part of this aggregate turnover to calculate the same. And then I clarified you through a help of an example as well. Then, my dear friend, I discussed with you the definition of a supply, that what is the supply means. There should be the 4 ingredients. There should be a supply of service or goods. There should be a sale for a consideration by a person in course or furtherance of business, meaning thereby if the consideration is missing, then it is not subject to a supply. But there are certain activities wherein it will be supply even because they are falling under the schedule 1. Then I discuss with you, my dear friend, in case you are providing certain free of cost or you are getting some advances, then how it will be taxable, the branch transfer, whether taxable or not, and the different type of classification of the supply, that is taxable supply, exempt supply, interstate, composite, and mixed supply. We discussed that. I discussed with you the mixed supply and the composite supply also, meaning thereby in case there is a natural bundling of the two activity, it will be called as a composite supply. But in case there is an artificial bundling of the two supply, different supply, for a single rate, it will be a mixed supply. And in that case, the highest of the rate will be applicable of the two supplies which we are doing. Then, my dear friend, we shared you the presentation also, which help you to understand the illustration. And then now let us move to the another aspect of the GST, that is the reverse charge mechanism. My dear friend, as you are aware that when we are talking about the GST, there is an aspect that, okay, when we are discussing about the GST, we are discussing whether the who will pay the tax. So there are the two mechanisms when we have to understand that who will pay the tax. So one is forward charge, another is a reverse charge. Forward charge means the supplier will charge and collect the tax and pay to the government, whereas in the case of a reverse charge, it is the buyer who is supposed to pay the tax to the government exchequer rather than paying to the supplier. So, my dear friend, this is called the reverse charge mechanism. So, if you have a doubt that what is reverse charge means, I just wish to clarify you once again, though we have clarified in our lectures, that the reverse charge means the person who is receiving the service will pay the tax. Now, what are those services where the recipient is liable to pay the tax is something that we should be discussing. So, my dear friend, as I discussed with you, for example, in the good transport agency, you are taking the service of a GTA, then the person who is paying the freight is supposed to pay the tax. In case of a legal service or advocate services, it is the company who is taking the service is supposed to pay the tax. Likewise, for the arbitral tribunal, sponsorship service, government services provided by the government, or of a renting of a residential property if the recipient is a business entity. In all those cases, in all these cases, the person who is receiving the service is supposed to pay the tax under the reverse charge mechanism rather than the supplier will pay, collect and pay. Likewise, my dear friends, there are many other services which are there before you. For example, the transfer of development right in case of a builder, the long-term lease, the supply services supplied by an independent director. So, independent director taking a sitting fees. Now, who will pay the tax? Sitting, in case of a sitting fees, it is the company who is paying the sitting fees, has to pay the GST under the reverse charge mechanism. So, this is all which is there in the reverse charge mechanism. Likewise, there are many other services. For example, there is a recovery agent services, and then we have these services provided by a music composer, authors, and direct selling agents, and then the business correspondent is there. We have a security services also. Then the renting of a motor vehicle, the rent a cab, lending of a securities, and then there are many others. So, my dear friend, what I wish to convey you that it's very, very important that one has to understand that somebody, there are the many services wherein the liability to pay the GST has been shifted to the buyer rather than the supplier. Now, I just wish to convey you the 3-4 aspects. Number one, that when the RCM provisions are applicable, one has to learn that when my liability will accrue. Number one, on which activity will accrue, I shared with you. Number two, you should learn by the way of the presentation given to you, all of you, that when my liability will accrue. So there is a time of supply provision, which I am going to just share you a glimpse as well once again, that we have already given. That in case, say, for example, you are taking the advocate service. Now, when the liability to pay, it will be the liability that you have to pay under the reverse charge mechanism. But when you will pay. So for that, there is a provision that within 60 days from the date of invoice, you have to pay or the payment, whichever is earlier. Then the third aspect which you should learn, that whether you can pay the reverse charge mechanism through the cash or you can use the ITC. The answer is that you can use you can't use the ITC to pay the liability of the reverse charge mechanism. You have to pay in cash, and then only you can claim the credit of the same. So these are the few aspects which you should be aware of while you are complying with. I can just share with you where even in the service tax regime, the reverse charge mechanism provision was introduced in 2002, but still I find that there are many cases which are going on by the department when the assessees are not complying with the reverse charge mechanism provision. So it's very important that we should be aware of that on which activity the reverse charge provisions are applicable and when to pay, how to pay. All these are the interrelated provisions you should be aware of. Then, my dear friend, we just move on, and the next chapter, which I believe that you must have already go through, is the time of supply, meaning thereby when your liability to pay the GST will accrue. And my dear friend, in case of a goods as given in the section 12, earlier it was the advance received or the invoice issued, whichever is earlier. But now, my dear friend, after the amendment, the supply or the time of supply for the goods is when you are removing the goods or you are issuing the invoice. as the case may be, because whenever you are removing the goods, you have to raise the invoice. So meaning thereby on advance received, you are not liable to pay the GST. Say for example, I am selling the water bottles. So if I have received the advance for 1 lakh rupees as an advance for the supply of water bottles, my liability will not be accrue on the advance received. Whenever I will sell, whenever I will issue the invoice for the sale, then only my liability to pay the GST will accrue. But in case of a services, I just wish to share with you that in case of a services, it is not the case. It is the advance received or invoice issued, whichever is earlier is the point. Likewise, my dear friend, in case of a reverse charge, when your liability to pay the GST will be there in case of a goods, it is being given that the date of the receipt of goods or the payment made or within 30 days from the invoice being received. So my dear friend, when your liability to pay the tax under reverse charge mechanism for the supply of goods is something which I am just sharing you on the slide. Whereas in case of a, so these are the few illustrations which we prepared and shared with you in my deliberations as well. As far as the vouchers are concerned, I clarified you that in case of the voucher, if the product is identifiable, by buying this voucher, you can purchase only a particular product, and you are aware about the HSN code and the rate of the same is, then the liability will be there on an immediate basis. But in case the redemption of the voucher can be there for any of the goods, in that case, the liability of the GST will accrue whenever there will be a redemption. Likewise, my dear friend, in case of a services, you are aware that as I mentioned you, that the liability to pay the service in case of a services is that payment received or invoice issued within whichever is earlier is the case. And when to erase the invoice, I explained you that within 30 days from the provision of services. Otherwise, it will be the payment received or date of provision, whichever is earlier, will be the liability when it will be there. My dear friend, I shared with you in case of a reverse charge, as I mentioned you in the case of a reverse charge, it is the 60 days or the payment made or 60 days from the date of invoice, whichever is earlier is the liability to accrue. And in case of a voucher, the liability will remain same as it is in case of a goods is there. Then my dear friend, in the change in rate of tax, I tried to clarify that very beautifully through the help of a very simple example of a majority wins, wherein I try to clarify you that in any activity, there are the three events. One is the date of invoice, the another is the date of payment, and third is the provision of service or the provision of supply of goods, and the two of the activities. So if the rate is changing on a particular date and the two activities are performed prior to that date, then the old rate will be applicable. But if the two activities out of the three are performed after the implementation of the new rate, in that case, the new rate will be applicable. So my dear friend, this was the way that it is very easier to understand by all of us, that whenever there will be a change in rate of tax, how we have to tackle that kind of a situation. Then, my dear friend, as far as the valuations are concerned, we discussed that aspect also, and I believe that you must have covered that valuation chapter by this time because you must be moving on a very fast pace when we are sharing you the various lectures. The valuation, my dear friend, in case of a valuation is concerned, I just wish to give you a very, very important fundamental clarity that in case of the valuation, there are the two fundamental aspects which you should be aware of. Number one, that in case the supplier and recipient are not related party and the price is the sole consideration, meaning thereby if A and B are both are related person, then whatever the value they are giving to each other, that will be subject to the scrutiny. Or if the price is not the sole consideration, meaning thereby there is a consideration which is flowing in the kind as well, maybe a barter transaction. So except these two cases, whatever will be the value you will charging. Say for example, the normal price of a water bottle is 100 rupees and you are charging 40 rupees. Whether that 40 rupees will be acceptable, the answer is yes. The only two conditions when it will not be accepted is that the supplier and recipient are related party and the price is not the sole consideration. So if these two cases are there, then the 40 rupees will be subject to the scrutiny. It will be a questionable. But in case these two aspects are not there, in that case, the price, whatever is you are charging, even if you are charging 100 rupees from somebody and 40 rupees from somebody else, nobody can challenge that. But they can challenge you in case these are the two aspects are there, that the price is not the sole consideration and supplier and buyer are related party. So my dear friend, I try to clarify you that, okay, if it is the case, then there will not be an issue. And then my dear friend, I explained you that if the 40 rupees is the price, In the 40 rupees, you have to add something. For example, you are getting the something free of cost, or you are collecting some other taxes other than the GST, some royalty or license fees is there. You are charging some incidental packing charges are there, out of pocket expenses are there. So in the 40 rupees, you have to add that. And then that will be the value of your supply. But in case the both are related party, so if A and B are related party and then there is a transaction, my dear friend, in that case, I shared with you that there will be, in that case, what will happen? That there will be the many rules which will be applicable on this kind of a transaction. So my dear friend, I explained you, I shared you that what all principal rules will be applicable. I just wish to show you that slide once again so that you will be just remembering what we discussed. Again, I repeat that in case the price is the sole consideration and the supplier or not, the recipient are not related, in that case, if the answer is yes, the transaction value will be the final value. And in the final value, you have to include, you have to have the inclusions. You have to have the inclusions of incidental expenses, any tax, interest, subsidy, or something like that. But if the price is not the sole consideration or supplier and buyer are related, and then in that case, you have to go with the various rules which are applicable in this kind of a scenario. So I shared with you that these are the 7, 9, 10 rules are there which will be applicable in this kind of a scenario when the price is not the sole consideration and the supplier and buyers are related. So rule 27, 28, 29, 30, 31 will be applicable. These 5 rules are very, very important to learn, that to arrive the right type of a value. So it's an arm length price. So like a transfer pricing, you have to calculate the arm length price in case you are the related party transactions are there. And then there are the 6 other rules are there which are related, specifically related to the lottery, betting, gamblings, or in case of a pure agent, in case of a foreign exchange transactions like that are there. So for the different type of transactions, the government has provided as the section 15, and along with the section 15, they provided us the various rules so that we can understand the nitty-gritties of the calculation. So my dear friend, these are the various rules wherein we calculate, first of all, we calculate the open market value. If the open market value is not available, the similar kind and quality value is there. And if the similar kind and quality value is not there, then the cost plus 10% is another method. And then the reasonable price, the reasonable method will be followed by the assessees to determine that what will be the right value of their supply. So my dear friend, this was all in a 20 minutes time. As I mentioned you every time that I will be giving you the gist of the discussion for the first 20 minutes, and then I will go back to all of you and try to answer your questions. So I request you now with these 20 minutes, a brief overview of the whatever we have discussed in the last maybe around 20-25 lectures which we have shared with you. The team must have shared with you before by this time is presented before you once again. And now I'm available to have your doubts clarifying your doubts. So you may put up your questions in your doubt in your Q&A portion, and I will answer them one by one wherever you feel that there are the doubts in your mind.
As I suggested, I request everybody to kindly write their questions in the Q&A box, and we'll take it up one by one.
Chetan Kumar is asking a question. Suppose a person has filed an application for the cancellation or registration because the aggregate turnover become less, and the period from date of applicable to actual cancellation, he again hits the aggregate turnover threshold limit. What should be a person do to take back the cancellation application? I believe that if the cancellation application is not processed by the department, you can always apply for a revocation of your cancellation application. Otherwise, you have to take a fresh registration, Chetan. So you have to check whether your cancellation application is being processed by the department or not. If it is not being processed, you can always take back your application with a request letter submitted to the department. Otherwise, you have to take a fresh registration. Then the next question is there any situation wherein the application for amendment found to be deemed rejected There may be a case when your returns are not there, or you have not attached all the documents related thereto. Then it may be a rejection of the application, this amendment application as well. Sarjan Goel is asking a question: what are the cases where we can't claim ITC? Sarjan ji, just to share with you, there are many cases when you cannot claim the ITC. I shared the presentation also, but just to share with you, in case you are dealing with the exempted supply, number one, you can't claim the ITC. Number two, there are the block credits, section 17, subsection 5, like a motor vehicle, insurance of a motor vehicle, food and beverages, rent a cab, works contract, immovable property. There are many others. In case there is a fire or you are giving a free samples, then also you cannot claim the ITC. So there is a long list when you can't claim the ITC. So I try to answer few of them. Nageshwar Rao Kasturi ji, sir, shall we revoke voluntary cancellation of registration? Yes, you should. You should apply for that. Then only it will be possible. So that's the point. Chetan Kumarji is asking a question: does the person eligible to claim ITC in case of voluntary registration, or does he enjoy any benefit of taking voluntary registration? Yes, if you have taken the registration, you can apply for a ITC. I shared a slide with you that if you are taking the voluntary registration, even prior to the registration, if you have any credit available, you can take that benefit of that ITC as well. So I answered this. Then we have a Rishabh Joshi. Sir, what is a composition dealer? What composition levy its eligible criteria, and also what is bill of supply? Rishabh, I have recorded the presentation for the composition dealer also, which will be shared with you. But just to share with you, in case your turnover is below a threshold limit, then you can opt for a composition scheme. And for that, there is a mechanism. And then what will happen, that you will be charging a lower rate of tax, a lower rate of GST with no input tax credit available to you. So there are the threshold limit for the goods supplier. There is a threshold limit for the service provider. ITC, and you will not be able to charge from your client as well. And then you will be raising a bill of supply rather than a taxable invoice. Then Srinivas Yadav ji is asking a question. Thanks for your good lecture. I pay sincere gratitude. Please explain me RCM with ITC. I just wish to share with you, for example, you are taking an advocate service, Srinivas ji, and then you have to pay the GST under the reverse charge mechanism, meaning thereby you 1 lakh rupees invoice will come from advocate. 18,000 rupees on the advocate service you will pay directly to the government, and then that 18,000 rupees you can claim as a ITC against your output liability. So say for example, you are a trader and you have to fight a case unfortunately you have to fight a case in the High Court, and you are paying 1 lakh rupees as a advocate fees. So on 18,000 rupees you are paying as a reverse charge mechanism, you can use that 18,000 rupees against your sale of goods which you are doing. So whenever there will be a liability, say for example, you are selling the 2 lakhs rupees goods in the market and 24,000 rupees is your output liability, then 18,000 rupees credit you can use against your output liability of 24,000 rupees, and you will pay 6,000 rupees only in cash to the government. Then the next question is from an anonymous participation. Sir, does the rule of ITC are different for dealing goods and providing service, or same? They are same. So if you are dealing in goods or you are providing the services, the rules are same, one and the same. So I answered all the 8 questions. I may request other colleagues also, if you have any doubt, please raise the question. Who is liable to pay tax in case of a sponsorship any event? The sponsor. So say for example, you are a association organizing a program, and the X Limited is giving you the sponsorship. In that case, X Limited will pay the tax to the government. 18% rate of it, GST is 18%. So if the sponsorship of 2 lakhs rupees is there, 36,000 rupees will be paid by the X Limited directly to the government exchequer. Sir, composition scheme have different rate or one rate is applicable. There are 2-3 rates. Different schemes are there. For example, you are a restaurant, then 5% scheme is there. If you are dealing in the goods, in that case, 1% GST is applicable. So like that, there are the different rates. I have given you the slide. You will get that particular slides very soon by the administrator. Chetanji is asking a question, explain the input service distributor. Chetanji, just to share with you, for example, you are a company called XYZ Limited. Now, you are having 10 branches and you got certain services, you purchased, you took some certain services. Now, what is happening that the head office is having a no output liability. For example, you took the 10 lakh rupees services as a auditor services and 1,80,000 rupees you paid as a GST. Now, output in the head office, there is no output liability. So what you will do with this credit? Credit is lying idle. There is no use of the credit. So what you will do? You can distribute that 1,80,000 rupees credit to your branches by following a formula. So when you are distributing that credit to your branches, that is called input service distributor. So let us just differentiate. जैसे संधि विच्छेद करते हैं, input service distributor, meaning thereby you are becoming a distributor of an input service credit. And you are taking a separate registration for the same to distribute that credit. That is called input service distributor. There is a formula that you have how you can distribute, which is given in the slides. I believe that slides must have been shared with you as well by this time. Sir, if there is any, please explain ITC adjustment variation in capital goods and regular goods. Just to share with you, there is a separate rule 42 for the goods and rule 43 is there for the capital goods. So in case you are dealing in a taxable and exempted supply, then only the adjustment is required. Otherwise, for capital goods and regular goods, the principles are same. You can avail the 100% of the credit in case you are dealing only in the taxable supply. But in case your supplies are taxable as well as exempted, in that case, you have to follow the regular goods, rule 42, capital goods, rule 43. Parfulji is asking a question. Suppose a company has not paid GST and later become insolvent. Will the company be entitled to pay the GST? As per the IBC provision, the insolvency and bankruptcy provision, there is a hold on the recovery of the GST in case the insolvency proceedings has been started. So till the time the insolvency proceedings are going on, no GST recovery can be there. Akib ji is asking a question. Is it compulsory for a registered dealer to issue computerized receipt or they can give a handwritten receipt? Anyway, you can give a handwritten receipt as well, but that should be a serially numbered. So Akib ji, is very important that you should have a serially number maintained the receipts. Otherwise, it will be always allegation that you may have received much more amount as compared to reflected in your books of accounts. So even if you are giving a handwritten, it should be serially numbered. Then there is a question, sir, under ITC, sale of share 100 crore, purchase of share 98 crore, difference is 2 crore. Under ITC, 1% is exempted. My question is that remaining amount except of 1% ITC is available. My dear friend, I just wish to share with you that the 1% is exempted, meaning thereby that in case you are dealing, say for example, you are a consultancy service of let us say you have a consultancy service of rupees 1 crore. And you are having a dealing of the share of 100 crore. and the profit of rupees 2 crore is there. In that case, 1 crore of consultancy will be called as taxable supply, and 1 crore of the dealing in share, 1% of the 100 crore will be treated as an exempted supply. So what will happen that your turnover will be 2 crore, 1 crore taxable, 1 crore exempted. And say, for example, you have a credit of rupees 50,000 is available. So the 50,000 will be divided into 1 by 2. 1 crore taxable divided by total turnover of rupees 2 crore, and the 25,000 rupees credit will be available to you. So this is the method, or this is the concept I shared with you through the example, which you are also quoting.
Dear past participants, sir has answered almost all the questions that have been asked. In fact, all the questions. So if there are no further questions, just let us know, or we can wait for another 2 or 3 minutes for you to post the questions.
Sir, please explain online information and data access and retrieval service. Chetanji, I just wish to share with you that in case of an online information and data access and retrieval service, what is happening that there is a taxability under the reverse charge mechanism, vis-a-vis that there is a liability that somebody has to take a representative registration here in India. Now, what is happening, say for example, there is a online journal. Now the journal is being maintained, is being issued from the France, Paris, and you are taking the subscribing the journal in India. Now, who will pay the GST? The question is this. So since this activity falls under the online information and data access and retrieval service, as per the provision of the government, the supplier of that journal has to take a registration in India and then charge the GST from the buyer. Charge the GST from the buyer rather than it will be under the reverse charge mechanism. So in that case, they have to take a representative registration. Some representative will be here in India. They will take the registration and charge and pay the GST under the OR services. But in case the somebody who is registered with the department, okay, in that case, what will happen? It will be he will pay under the reverse charge mechanism. So these are the two concepts of online information and the data access and retrieval service. Now, the next question from Harita is, sir, in order to claim discount before sales, should there be any agreement? No. As such, if you are giving a discount before sale, then there is no agreement required. You can simply give on the invoice itself, the face of the invoice. If the amount is 10,000 rupees, you are giving a discount of rupees 2,000. Mention 10,000, mention 2,000 as a discount, net price 8,000. That's it. No agreement is required. But in case there is a discount post sale, in that case, if you want to claim the benefit of the GST, there should be an agreement.
Do we have any further questions? Atul sir have answered more than 20 questions today, and I believe there are no further questions. So that brings us to the end of the session. So with this, we are going to. Okay, there's one more question, sir.
Dharni is asking a question, sir, difference between FCM and RCM, forward charge and reverse charge. Dharni, I just wish to share with you, in case of a forward charge, if I am a supplier, what I will do, I will charge, say for example, I am supplying you advocate service. I'm supplying you a consultancy service. What will happen? That I will charge you 1 lakh rupees plus 18,000 rupees GST. You will pay me 1,18,000 rupees, and 18,000 rupees tax so collected by me, I will pay to the government exchequer. But in case of a reverse charge mechanism, on the invoice of rupees 1 lakh, you will not pay me 18,000 rupees. What you will do? You will pay me only 1 lakh rupees, and 18,000 rupees amount, 18,000 rupees GST, you will pay directly to the government exchequer. So that is called reverse charge mechanism. Shruti Kamath, can you please explain the retention of ITC? Retention means that, okay, you can retain the credit if you are paying within 180 days to the supplier. So in case you are making the payment to the supplier within 180 days from the date of invoice, you can retain the credit. Otherwise, you have to reverse. So I explained you the retention part, that you have to pay within 180 days from the date of invoice. So say, for example, the invoice is from 1st of January. You availed the credit maybe in the month of March, April, or you received the invoice in the month of March, April, hardly matters. You have to pay the tax along with the value along with the tax within 180 days from the date of invoice, that is from the 1st of January. Say, for example, 28th of June. You have to pay to the supplier, then only you can retain the credit, whatever you have availed earlier. Otherwise, you have to reverse. And in that case, you have to pay the interest at the rate of 18% as well. Chetan Kumar, sir, can suspension period be extended? Yes, if the department has suspended your registration, they can always extend your suspension. Please explain inverted duty structure. Now, Shankara Lingam ji, just to share with you, for example, your output activity. Say, for example, you are manufacturing a shoe. And when you are manufacturing the shoe and selling the shoe, that attracts the GST at the rate of 5%. Wherein, when you are buying the raw material of the shoe, that attracts the GST at the rate of 18%. So what will happen? Say, for example, you are buying raw material for rupees 70. 20 rupees is your labor and 10 rupees is your profit margin. So what will happen? On the 100 rupees sale of shoe, you will charge 5 rupees as a GST. Whereas on the 70 rupees raw material you purchased, you paid the GST at the rate of 18%. That is meaning thereby you have paid 12 rupees 60 paisa as a GST. Now what will happen? The 5 rupees out of the 12 rupees 60 paisa you can use against your output liability. But the 7 rupees 60 paisa will not be usable because there will always be a same situation. So in that case, there is a system called inverted duty structure wherein you can claim a refund of that 7 rupees 60 paisa from the department. And that is called the inverted duty structure, meaning thereby when the raw material GST is more than the GST liability of the final product, in that case, that is called inverted duty structure. Chetanji is asking a question, sir, can we also request for extension of suspension period or a complete discretion of the authority? It is the complete discretion of the authority. Samir Pandey is asking a question, sir, please explain the difference between availment and retention. Availment, the moment you are getting the invoice, you can avail. But when you have availed a credit, whether you will be able to retain that credit or not will depend whether you have paid to the supplier or not. So if you have not paid to the supplier within 180 days, then the credit availed has to be reversed. So availment is one, retention of the credit, availed credit is different. Retention means you have to pay within 180 days from the date of the invoice. So that is called the retention. Then, my dear friend, the next question which is being raised, explain the condition under motor vehicle and air vessels criteria for ITC availability. So motor vehicle credit can be availed only and only if it is a more than 13 passengers vehicle. Number one, like a bus, you can claim the credit. Number two, that vehicle must be used for the 4 activities. Number one, for transportation of passengers. Number two, for the transportation of goods. Number three, further supply of motor vehicle like a showroom. You are buying and selling the motor vehicle. In that case, also the credit is available. And number 4, you are running a driving college, motor driving training school. In that case also, you are eligible to avail the credit of the motor vehicle. ITC availed or retained, which one is credited to electronic credit ledger? Availed. It is availed, which is credited to your electronic credit ledger. If you are not paying within 180 days, you should reverse from your electronic credit ledger. Sir, can a voluntary registered person avail ITC? The answer is yes. GTA can opt for forward charge tax? The answer is yes. They can opt. And now recently the law is being amended that they can, once they have opted, they can continue for years and years unless they want to go backward to the reverse charge mechanism. So only one time option is required to give. A return, Samirji, we will be having a separate session. Maybe in the fourth class, I will explain the return part. Dharni is asking, can you please explain me the complaint requirement for business is in India and how we ensure that the organization compliances? Compliances requirement for business in India. Dharni, there are many compliances how I will be able to. But just to share with you that you should maintain the ITC register. Number one. Number two, you should maintain the stock register, fixed asset register. 3 registers are required. Then you have to file the monthly return of GSTR 1. You have to file a GSTR 3B on a monthly basis. Then you have to file annual return. In case you are dealing in a taxable and exempted supply, then you have to file annual declaration. In case you are dealing with a composition dealer, then you have to opt for a composition scheme. In case you are working as a job worker, then you have to file ITC 04. Likewise, there are many others.
I believe all the questions have been answered for today. So this brings us to the end of this wonderful session. I hope you find this session very insightful and all the queries has been resolved. I would like to thank Seattle Gupta sir for taking out time and sharing his insight with us and with all the participants for joining the session. And as I already rightfully explained that we are starting a new batch from 22nd of August. So this is just a reminder thing. Kindly refer your friends and colleagues in that. Also, I would like to say, announce that we have a Taxo News app, which we have launched few months back and just getting a very good response. You can get all the due dates of GST, income tax, ROC, PF and ESI updates on it, plus all the GST related news you can get through this app. So it's a free of cost thing. Please download it. And thank you again, Atul sir, for your time and your wonderful insights. Thank you, everybody, all the participants for joining. And you have a lovely evening ahead. Bye.
Thank you, Ji. Thank you very much.